Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. Also, let's look at how the Nifty and the Sensex are moving in trade. We've seen the Nifty testing 18,700 in today's trade. We've also seen the Sensex up by almost 390 odd points. So the markets are looking good. 63,113 for the Sensex right now. Both the indices are up by 0.6% odd. We're also seeing better momentum in the mid cap and the small cap 100 indices. In fact, the mid caps are taking the lead today with over a percent kind of gains coming in for this index. A lot of sectors are also pulling up higher in trade. Stocks from the IT basket, realty, pharma, these are the sectors that are doing well. We've also seen the Nifty bank really recover sharply in the last few minutes, and the IT stocks are, although off the lowest point of the day, just about 2.3, 0.4% odd. But look at the Nifty Realty Index. That's the one that's leading the show today. 2.7% uptick for this one. Pharma stocks are higher by 1% odd as well. Apart from this, a whole host of other sectors are also up into the green. Look at the metals, for example. They're also inching higher by about 0.8% odd. So lots to celebrate in the markets today. We've also seen the MRF shares hitting that historic 1 lakh mark today. So definitely some of the stocks creating history on D Street. We are seeing a lot of gainers from the consumption basket today. Nifty gainers include Tata Consumer Products, Asian Paints, Titan. All of them are up by over 2% odd in today's trade. Also seeing Cipla, ITC and Tata Steel 1.5 to 2% up in trade as well. On the flip side, however, we are also seeing RIL up by 1.5%. So heavyweight counters also moving the markets higher. On the flip side, it's Kotak Mahindra Bank, Adani Enterprises, HCL Technologies that are still down in trade about 1% or so. SBI, for example, Adani Ports and M&M slightly dragging in the trade in today's trading action. Let's welcome our guest on the show. Devam Sharma joins in. He's a co-founder at Prem Portfolio. Devam, welcome and thank you so much for taking the time. Well, it's a great Tuesday to talk about because we've seen most of the segments in the markets really up in the green. The benchmarks are inching closer to the record levels as well. What are you reading into the market sentiment and what do we expect going forward from here?
See, we are going into markets where the foreign portfolio investors are really supporting the markets, and we are going into a trajectory which started off in April, where RBI had paused the interest rates. We are now going into a trajectory starting June, like the policy announcement of Fed is going to happen tonight and day after. So over there, we are anticipating a pause. And when that happens, we would see markets further rallying from here as the interest rates in US are still not able to cover the inflation and the money is going to go into risky asset classes as in equities. So, and India is presenting a wonderful opportunity here where the GDP growth anticipated from India is the highest, and we are going to see huge flows coming into India. Another thing that I noticed is that in times of quantitative tightening that was anticipated for $750 billion, there has been a quantitative easing instead in the US, and that has been for $100 billion. So there has been liquidity in the markets, and that liquidity will chase equities in order to beat inflation.
Right. Devam, a lot of pockets are moving in trade. Let's look at the realty, for example. That's been on an upward trend for many sessions now and continuing the momentum today as well. Are you seeing things structurally changing for this space? How are you positioned on this sector and what would you advise investors to do?
So, reality has done really well over the last few months, and in terms of uptick, also we have seen some good uptick in especially the organized players. That has also to do with a lot of unorganized players getting out of the market and organized players getting benefited out of it. Although we are not very heavy in terms of our allocations into real estate at this point in time, we would continue to see good demand coming in from investors into real estate going forward. And these organized players would benefit from increasing their market share versus the unorganized players.
Okay, understood that. How are you looking at the pharma space? This space has also, after a long haul of underperformance, started to see some uptick. Is there enough to see as early signs here?
Definitely. We are very much bullish on pharma sector. If you look at US, the all the issues that were there persisting have been solving over the last few months. If you look at results recently, the large players have done really well. In terms of margins, we are seeing improvements. In terms of outlook, be it domestic sales as well as international sales, the outlook has been good. So, and the valuations have been comfortable. If you look at pharma over the last 3 years, it has not run up. While the companies have continued to perform. So we see that there is a lot of cushion in terms of valuations in this sector, and this should be the one which should do well versus others in the coming quarters.
Okay, understood that. And there's another interesting pocket that is in focus. Some of the telecom stocks are in focus today. We're seeing Bharti Airtel, for example, inching closer to its 52-week high levels as well. In fact, Bharti Airtel has informed that it has crossed the 3 crore subscriber mark in Andhra Pradesh and Telangana. It has rolled out its 5G plus services in Leh, Ladakh and in Kargil, and customers with 5G enabled devices can in fact enjoy high speed of 5G plus as well. We're also seeing the market share concentration of both Jio and Airtel is at highs of 72% odd right now. We're also seeing stock of Tata Communication touching lifetime high as well. In fact, we've seen the past 1 week performance for this stock has been 13.8% or so. We've also seen the last 1 year the stock has given a return of 74% and 3 years a 230% up move. Whereas for Bharti Airtel, when we see 1 week's performance, 1 month's performance has been about 5 to 6% odd. 1 year performance has been about 25%, and 3 years it has given a return of 52% odd as well. How are you reading into some of these stocks from this basket, and does it warrant investors' attention?
Yes, definitely. So it's almost a duopoly market now where the two players are leading the show, and Vodafone is still not that aggressive.
Yeah.
So we believe that this sector would continue. We are 140 crores in population, and with 5G coming in, the ARPUs are definitely going to go up. And we see that this sector would continue to do well going forward post this consolidation. So definitely for long-term investors, this allocation into this sector makes sense if you are a blue chip long-term investor.
Okay, understood that. Where else are you looking at opportunities for the investors in this current market setup? Are there any interesting themes that you're looking at, some specific stocks, if you'd like to share?
See, we are looking at manufacturing and PLI as a theme. In the broader markets, a lot of stocks are available which are still single-digit PE multiples. And in times like these, we believe that going forward, the kind of allocation that is coming into markets and that is going to come into markets from foreign portfolio investors, from mutual funds, from retail investors, the market valuations are going to go to very high levels. So there are a lot of players in the broader market where the valuations are single digit, be it in terms of cement, textile, chemicals, pharma, all these sectors, and you'd find a lot of players over there which are available at so value stocks is where we are putting our bet on, and wherever there is a run up in the stocks, we are reallocating into these opportunities which have still not run up. We feel that this rally going forward with the kind of infusion that is going to come in will be more broad based, and the broader stocks which have not done well still would do well going forward.
Okay, understood that. Let's talk about a few stocks that have been in momentum through this trading session. MRF, I'll take your view on that. The stock has touched the 1 lakh mark for the first time. In fact, any company on Indian stock exchanges has hit that mark, 1% up even now. What a remarkable number on the screen. I can see 6 nines on the screen. Okay, 1 lakh mark again turning right now. You can actually see that live in front of your screens. Very rarely do you see that kind of a number on any stock, and India now has one stock at least which has crossed that 6-digit mark. Your own sense of how the kind of performance we've seen over the past many years for this company, the kind of wealth creation that we've seen here. Of course, there is a low float that we always keep talking about, very less shares, because people who hold these shares are, they always refrain from selling this in the market, and therefore there are very less sellers of MRF in the market. But going forward, for those investors who may be looking at this, who may still want to afford this kind of an expensive stock in their portfolio, what would you say?
So it's a remarkable story. I was just looking at the numbers. So it was 1,000 rupees in 2002, and today it is 1 lakh rupees. So it is almost 21% CAGR. Now that's what now that now that's what we as investors look at. That if you are able to get a 20% kind of a CAGR, that's what we as investors look at, right? Warren Buffett has compounded his wealth at around 19.5%, and this stock has done what a Warren Buffett does for himself, doing so much of research. So definitely kudos to the company and the management to have delivered such great results for investors. I would suggest that investors who are holding this story should continue the compounding and should continue to stay invested. This is definitely a consumption theme and should definitely benefit. If you look at the kind of automobile numbers that are coming in, this stock should definitely benefit going forward.
Okay, this stock should definitely, hold good for returns even going forward. So your investors can continue to hold on at these levels as well at 1 lakh. If you still have the patience to hold on, the stock does have potential to even go higher from here. But let's also talk about a stock that's actually not doing well. We'll talk about Zee Entertainment Enterprises. Now, there's been a lot of development through this trading day's course. Last night we got that SEBI order where they banned Subhash Chandra and Puneet Goenka from holding any managerial positions. There were, reports of siphoning of funds. Of course, it's an old issue, but that's what the SEBI order has come about. We've seen both the promoters, in fact, moving the tribunal against this order in today's trading session as well. We saw the stock recovering from the day's low of about 7% ordered at hit in the negative zone today. It recovered after the company released an official statement saying that, we will continue to create value for shareholders even going forward. But how do you really look at the kind of developments that we are seeing for Zee Entertainment? This comes at a time when we are going to be seeing a merger with Sony as well. Will there be a question mark? Will there be a delay to this merger? How do you really decipher this news flow?
See, definitely there could be some hiccups to the merger and NCLT approval going forward with the kind of events that have turned up for the company. We also see that Puneet Goenka and Mr. Chandra would not be able to take key positions in the merged entity. So that's again a negative for the stock. So we would stay away from this stock for now and
Okay.
wait for the kind of turning up. I have a sense that this might also be politically influenced. So we would definitely stay away from the counter the time these news events are done and dusted.
Okay, understood. Another remark that overall for the markets I wanted for you was that very interesting report came about yesterday. We actually saw DSP Asset Managers, company releasing a report wherein they said that if we compare the last 123 years data, you will find that India has superseded US and China in terms of the CAGR returns of 6.6% that India has given. When we compare it with the emerging markets or even the world markets, this has been a higher compounding annual growth rate at which Indian investors have really gained by being in the Indian markets. What does it really mean for an average retail investor today by looking at these data points, and what would you really say about the future of the Indian market story?
That's the beauty of market, that it continuously helps you beat inflation and give you a good double-digit compounding if you stay invested in a disciplined manner. So, definitely, if you look at the developed markets like US, India has outperformed, and it will continue to do so. If you look at the foreign institutions, the kind of allocations India is seeing, and the kind of commentaries that are coming in from large institutional allocators globally, for India, they are really positive, and we see that this trend should continue with the kind of population, with the kind of consumption story that we are showcasing, with the kind of demographics that we have in terms of providing cheap labor, cheap electricity, cheap land, cheap resources for manufacturing, with the kind of support that has come up from a stable government. We definitely sense that this story of India is going to continue for the next many years, and this is just beginning of a massive rally is what we sense. With the kind of flows that are going to come in from foreign institutions, retail participation still at lows and are going to continue moving forward. We feel that the demand and supply, the demand for Indian equities will definitely outperform supply for now, and that would take valuations to levels which would feel very expensive going forward.
Okay, understood that. Well, thank you so much, Devam, for being with us on the show and discussing these wonderful insights with all our viewers. Pleasure having you with us on Business Today TV. Let's look at how the markets are trading at this point in time. We're just about 10 minutes away from the day's close, and the markets are inching higher. There's no sign of any pullback or so. We're seeing the markets marching ahead. 18,722 for the Nifty, 122 points of an uptake. Even the Sensex is inching towards the day's high point, 435 points now higher on trade, 63,160 currently, with an uptick of 0.7% odd. So definitely the market's marching ahead. We'll just have to see what will be the closing levels today. But looks like we are going to be, having a good day's close at the day's high point. But for that, you'll have to continue to track the market movement with us on Business Today TV. So don't go anywhere, and stay tuned with us on various social media platforms and on our YouTube channel as well.
Let's talk about a multi-bagger stock that has delivered around 200% return in the last 2 years. Well, this Tata Group stock is up over 300% in the last 3 years. I'm talking about Indian Hotels Company. This Tata Group's company is South Asia's largest hospitality company by market capitalization.